Hello guys, welcome to another develop video. Today taking an in-depth look at Netflix, an American subscription video on demand over-the-top streaming service. The stock is priced at $850 with a market cap of 367 billion. As for valuation metrics, they have their trailing 12 months PE of 48.6 and a median 10-year PE of 82.8. Their price to cash flow is 49 and they don't have a dividend. Their revenue has grown by 67% over the past 5 years. Their net income has grown by 189%. Their earnings per share have grown by 191%. Their common shares outstanding have slightly decreased by 2.4%. Their liquidity also looks pretty good. They have an interest coverage ratio of 12.75, a quick ratio of 1.14, a long-term debt to ratio of 0.62, and the debt to equity ratio of 0.7. So their debt is at moderate levels. The cash from operations has gone from a negative 3 billion to positive 7.2 billion. The cash from investing has also increased from negative 387 million to positive 500 million. The cash from financing has went from positive 4.4 billion to a negative 6 billion. The capex has increased by 37.1.5% to 350 million. And their free cash flow has grown from minus 3 billion to positive 6.9 billion. Their financial ratios also look pretty good. Their return on equity is 45%, their return on investments is 27%, the return on assets is 15%, and the return on invested capital is 24%. Now to find the fair value, I use a DCF valuation, a multiple valuation, and the analyst expectations. I calculated the average, which is the intrinsic value, and adding a 15% margin of safety, we get an acceptable buy price of $475.19, suggesting that the stock at the current levels is extremely overvalued. Now, my personal opinion on this stock is that it's a great company, but it's just too overvalued. So if you manage to get this, I actually was invested in Netflix in 2022. I made a lot of money. I know a lot of people watching this video think that I'm too old school because of value investing, but value investing isn't dead. In fact, value investing is very alive and thriving. I made a lot of money in 2000 because of 2022 because a lot of tech stocks were dropping and because I'm a modern value investor in the sense that I use value metrics, but I'm also realistic in the sense that I invest in businesses that do not fully understand. Like, for example, you do not know the algorithm of Meta or Netflix or their whole procedure, but you do understand the basics of their business. I invested in a lot of tech companies that are trading below their fair value, and I made a lot of money. I easily beat the S&P. And this also applies to Netflix. So before you say something that I'm a old value investor that gets destroyed by the market, that is utterly untrue. And this company is a great company, just not to the fair value. So I bought Netflix in 2022. I don't remember the price. I think it was 300, actually low, 250. I don't remember exactly, but still I sold at about 700. Yeah, it was a good investment. Although I've made better ones in Nvidia, I made 9x. But yeah, sure, this is a great company, just not at fair price. There's really not much to add to this. Of course, they have their own problems with their content, because they're basically a media company, they're a creativity company. If their creativity runs out, if their shows are no longer great, if they don't offer a great product, which is of course very subjective, then they would have big problems. It's not like they're selling a good that is replicable and made in a factory. It's much harder to evaluate movies when making them. But since their revenue has been growing, their net income has been growing, we can see that they probably have been releasing good content since people pay for what they like. Yeah, I believe this is a great company, and it's probably 470, 500, maybe I think if actually lower. At 400, this would be a great buy, but for now, this is a bit too expensive for me. Of course, you should do your own diligence, sorry, and write in the comments what you think. And yeah, If you disagree with me, you can buy it. If you don't. Now let's move on to our affiliate, Ticker Data. Ticker Data is a real-life financial data tool for Excel that also gives you some templates. So if you want to evaluate your portfolio in Excel, if you want to do DCFs, they have templates for that. Bank valuations, DCM valuations, DDM valuations. Sorry. Uh, they're a great tool. I use them for the templates and also for the financial data because if you, for example, want to have your portfolio in real time, you want to do you want to get the balance sheet of a company, you want to get to calculate some ratios, you can easily do that with their API. So I suggest you check it out in the description. Also, please check out my investing blog featuring in-depth analysis. You can also check it out from the description, and I think you'll love it. It's free. I hope to see you in the next video. Bye.